This is James Altucher at TheStreet.com TV, and I'm here with Mad Money TV show host Jim Cramer. So, Jim, 52-week lows versus 52-week highs, what do you like better? Just you personally, at a gut level.
I actually like 52-week high because it's very hard to get on that list. It's kind of a, they've done some of the selecting for you, like Stockpickr. Any list that's generated by the market as a winner, a list that says that this company has passed both the business and the stock price, means that you're checked on both the technicals and the fundamentals. And I'm not a technician, but I like that.
Do you ever feel, though, like you got to the party too late when you buy one of those?
You know something? Leon Cooperman, when I was at Goldman Sachs, often said to me that his best formula for winning was to take stocks that are down 8 to 10% in a sell-off off the 52-week high. That was his shopping list. Now, I don't know if Lee still does that. This was when he was running the research department. But it stuck in my head, and I've been using it very successfully for 25 years.
Well, let's look at the other end of the spectrum. Let's look at what's on the 52-week low list, because I'm curious if we could bottom fish any of those guys.
In some of these, we have to figure out whether they're fads. Are they damaged stocks or damaged companies? That's the key issue here.
Well, one that I want to look at is something that I started thinking about it after your book, Mad Money. You have a technique for buying regional banks. You like to buy regional banks that are growing but trade for less than 2 times book.
Right.
On the 52-week low list from Friday was Alabama National Bank.
I immediately went, this has a book value of about 40 and change. It was hurt by the CEO being incredible, like M&T Bank, hurt by the CEO being incredibly downbeat about their business, and that created a decline. As, by the way, Key Bank is another one where the CEO created, well, look, the businesses aren't that good, but Alabama National, I would never have seen if it weren't on the 52-week low list. Of the ones that are on there, I pulled all the conference calls. I mean, I know Omnicare was one, and the conference call was bad. Now, the conference call was for Alabama, and that was bad, but those trade on book. Omnicare doesn't trade on book, so I've got a baseline that could make me want to buy Alabama. Remember, on the 52-week low list, they didn't get there by accident. It's like a lot of stocks. I was telling the guys from Stock Center 10. Nobody in America, in Britain, they like stocks that are 3 pounds and 2 pounds. In our country, it's a badge of dishonor. They didn't get there because they're doing well. Same thing, obviously, with the new low list.
But with Alabama National Bank, where the CEO basically talked it down, like they were doing a nice job on earnings, and he kept like talking the stock down.
And that's why if I were SunTrust and I was challenged for earnings, I'd just go buy them, which is why I'm so intrigued by it, and it makes a very good spec.
What about some of these airlines? JP Morgan downgraded the airlines, so you have Southwest on the 52-week low list.
Well,
Alaska
these are
Air.
consumer spend plays and fuel plays. Fuel's going up. Consumer spending seems to be momentarily. I don't want to be in the Doug Cass camp. A lot of people like to look at consumer spending and think that it has a definitive trajectory. It doesn't. It ebbs and flows. We could be in an ebb moment for consumer spend, but because the airlines are such trading vehicles, you would normally take profits in them.
Could, though, a Delta coming out of a bankruptcy be an acquirer of an LUV or an ALK?
Well, a lot of times when they come out of bankruptcy, I like to wait. I like to see them seasoned. Too difficult to see what they're really worth. When a company goes, when issued, I like to see it seasoned, and out of bankruptcy, I like to see it seasoned. Too quick to make. Now, that means I am going to miss some opportunities because of a noted caution, but I've been hurt, as a hit ratio, I've been hurt too often with those.
Now, one thing we're keeping track of is, maybe the competitors of LUV and ALK are not the other airlines, but the so-called online collaboration stocks. Cisco's buying WebEx. People don't have to travel anymore. They can have, great,
hey,
online
listen,
conferences.
let me give you a thesis I'm thinking about right now, jumping off point for that. I think that we are not making enough of Amazon and making too much of the woes of the stores. Amazon had a great quarter, and part of it is it's a share taker now from a lot of these stores. People are very comfortable ordering online what they would normally buy in stores. Let me use a quick sports analogy. When the Philadelphia Eagles lost to the Jaguars, everyone was blaming Coach Reed and the Eagles. And I got on and I said, well, you know what? There's another team here, and it's the Jags, and they beat us. If I'm Best Buy, Circuit City, Radio Shack, but I'm also Costco, I would look to see, given the fact that there's no sales tax And given the fact that they have very little shipping cost, Amazon may simply be more competitive. And that could be the real weakness behind those retailers. That's what I've been working on. I'm not there yet.
Well, what do you think of Amazon's simple storage service, their S3, line with they're trying to get businesses to move to their online service?
Works because of their fulfillment business. They have a back end that's a giant pipe that needs more business. That's going to rise gross margins. If look, the truth is Amazon was so heavily shorted it went up a lot. No one got in it. So therefore, like the Bill Miller strategy, he was in it, was vindicated by this very quick ramp up.
Well, Jim, thanks a lot. It's
52-week
lows and 52-week highs. We update the lists every day on Stockpickr, plus analysis of why they're each on that list.
So good.
So thank you.
Remember, this is one where there's 10. You look for one. This is dirt with diamond. This is not 10 diamond.
We update it every day, and thanks a lot. This is James Altucher with the Street.com TV.